My name is Mark Stephen. I'm going to be chairing today's event. Welcome to our 10th annual Fintech Summit. 10 years. Dear God, you'd get less for murder. Can I just point out that if you've got any sort of electronic device, mobile phone, whatever it is, can you switch it to silent? Toilets are located on level 2, the floor above. You've passed them already. No fire alarm test is scheduled for today, so if there is a loud noise, it is for real. Get out. Make your way to the nearest fire doors and out to the assembly point in Holyrood Gate. If we could ask you, don't go any further than that, because we need to be able to count heads and check everybody's out. All catering will take place in the stratosphere upstairs, and if you're using the venue car park, you can get a reduced rate of £6 by visiting the conference registration desk. That's probably the most important thing I'm going to say to you all day. I have to say a big thank you to all our sponsors and exhibitors. They are up there. They've got a great range of solution providers in the exhibition area. Some of them have already baited their traps. They want to attract you in. So F5 have got a set of Bose headphones that potentially you can win. Forrit have gone for the Ford GTI Technical Lego, always popular. And Axway have got something called a Samsonite Security Backpack, which Ray reliably informs me is like a little Faraday cage on your back. Why that helps, I don't know, but it sounds like the kind of thing that you might want. And it reminds me of a guy that I knew who actually went backpacking in Brazil, where there was a habit at the time of taking a Stanley knife and slitting your rucksack and nicking your stuff. And the trick at the time was to wrap your rucksack in chicken wire. You walked about with a rucksack covered in chicken wire. So I suspect the Samsung Security Backpack is better than that. I certainly hope so. In terms of the sponsors, the event would not be possible without their support. So please do stop by and give up some of your time if you wouldn't mind. It's probably going to be worth it. And make the most of the opportunity here today. Just engage with everybody, build new connections, get involved in the sessions and Q&As and so on. You can share on social media using the hashtag FTScott. I'm just going to quickly flag up our next 3 events, which are the Financial Technology Awards on the 12th of October at Dynamic Earth. Still a few tables left, so get your bookings in. Great opportunity to celebrate the success within Scotland's financial sector. Digital transformation, that's on 26th of October here again, and Digit Expo on the 23rd of November at the EICC. Digit Expo is huge, absolutely huge, and you know there's lots and lots and lots of new people to meet there, so well worth turning up for that one. Details on how to book can be found on the Digit website at www.digit.fyi. Now, basically to do a short introduction now, please welcome to the stage Nicola Anderson, Chief Executive Officer of Fintech Scotland. Nicola.
Good morning, everybody. Wow, how fantastic is it to stand up here and see an absolute full house? With a waiting list, no less. It just goes to show us how vibrant fintech innovation continues to be in Scotland. It's my absolute pleasure to be here this morning and to welcome you to the most fantastic event of the Fintech Summit that kicks off our Fintech Festival for the next 3 weeks, celebrating fintech innovation across Scotland, the UK and internationally. Now, I do want to pause for a moment just to reflect on Mark's point that this is the 10th Fintech Summit that we have here. I want to extend my congratulations to Ray and the Digit team for standing forward and giving us that leadership and really driving this opportunity forward. It really demonstrates the importance of collaboration across fintech innovation and the opportunity that we see as we take this forward even further. Thank you, Ray, and all of the team at Digit for all the brilliant work that you've been doing there. So we set our scene today. The event here today really captures the opportunity that we see fintech continue to present as we harness this and take it forward. Fintech innovation in Scotland, I would summarise it in 3 short words. Well, short sentences. Collaboration, and I think you're going to hear lots about that today across the agenda, and indeed you're going to hear and see lots of that across the Fintech Festival over the next 3 weeks. Partnerships, we're seeing that more and more become important as the large incumbent financial services and the fintech entrepreneurial community really establish that connection and drive forward the future of finance. And we're seeing that pay dividends now as we really lean into the opportunity that partnerships present. But most importantly, what we see and what the important trend is through our fintech innovation here is meaningful outcomes for customers and for businesses and for our economy. And it's through collaboration and partnerships and that purposeful intent that we really see that drive forward. So I'm privileged every day to be in that position where I see some of this unfold and I see those ideas come to bear fruit, where we change the outcomes for people through technology and innovation in financial services. And that's down to all of you here in the room. So thank you 100% for everything you do. Fintech innovation in Scotland continues to thrive. The fintech entrepreneurial community currently stands at around 220 businesses, the majority of which are driving B2B propositions, taking us back to that collaboration and partnership being really important. Most importantly, of that community, the majority now are starting to scale, or indeed having scaled and are starting to grow even further. So that stands testament, taking us all the way back to the Fintech Summit of 10 years ago and fast forwarding to where we are now, really coming behind that opportunity to scale. Investment in fintech here in Scotland sits at around 1.7 billion over the last 5 years. That's a significant number and something that we're really proud of. So our trends, as we think about that and the panel start to talk to us a little bit more about trends across the morning, we think are more collaboration, more partnerships and more meaningful outcomes for customers. Our fintech entrepreneurial community and our partnerships and collaboration are focusing on cost of living crisis, financial inclusion, the climate agenda, where AI plays a role, and most importantly to those that know me, perhaps it'll come as no surprise, I talk about financial regulation quite a lot. We see real depth in our entrepreneurial focus there. So enjoy today. You're very welcome to the Fintech Scotland Festival. I'm extending a warm welcome to those that have travelled far, particularly from international waters. You're very welcome this morning to the Fintech Summit, and you're very welcome to Scotland as we celebrate the next 3 weeks of fintech innovation. Please use the opportunity to learn, to innovate, to think about the future, to collaborate, to connect, and to be curious about what we can achieve. Thank you very much. I'm looking forward to speaking to you later.
Thank you, Nicola. Thank you very much, Nicola. Now, what has changed over the last 10 years and what's likely to change in the next 10? Our first speaker this morning is Devie Mohan, Fintech Researcher and Chief Executive Officer for Burnmark, and she's going to do something very courageous. She's going to predict the future. Devie, over to you.
Thank you. I think one of the things that COVID has given us is time to think. And we use the time. So I run a research company called Burnmark. We only do fintech-focused research. And one of my hobbies, of course, is trying to predict the future in fintech. But when COVID happened, it gave us some time to think about the past. Fintech is a term created in 2008. It was created in Silicon Valley by a group of entrepreneurs who thought we could revolutionize the way banking worked. So in 2020, we kind of paused and thought, have you really done what they set out to do? The disintermediation, the disruption, all of the things that they had in mind, have you done that? I run a research company, I'm a researcher, so there's a lot of data we found, and I'm hopefully going to present it in a not so boring way here, and what we can learn from it. As Nicola mentioned, regulations is absolutely key to understanding the future, because we kind of need to know what happened with the 2008 financial crisis and what the regulators did and what they're planning to do in the future. If we look at how regulations have changed in the last 10 to 15 years, we see that a lot of new regulations came about since 2008, mainly to stabilize the market, mainly for prudential regulation, but also around a lot of digital aspects. For example, security, privacy, consent, and ESG. A lot of new regulations have come about. But what we found also interesting is, compared to any time in the past, we are finding regulations which are heavier, which are more voluminous than ever before, which essentially means that banks and fintechs are now having to deal with regulations in a much more time-consuming way than ever before. We also find that the frequency of change of regulations in the past 15 years, the frequency has actually increased quite significantly when you look at it. Whereas the average frequency of change was 1 every 5 years or 1 every 10 years before 2008, we find that regulations are now changing every few months. New addendums coming to existing regulations, new regulations being launched around similar aspects. PSD2, for example, has changed significantly since they launched it. So we find that not just the volume and the content of regulations, but we're actually seeing a lot more frequency of change. Again, adding to regulatory complexity, adding to higher costs of dealing with regulation for both banks and fintechs. And is it working? So we did this diagram quite recently to look at all of the collapses of banks and all of the fines that banks have had, especially the big banks, since 2008. And it was kind of prompted by the two famous collapses a few months ago. And what we saw was, yes, regulatory complexity has increased, the number of regulations has increased, the volume of regulations have increased, but the collapses are still happening. So then we have a question, I don't know the answer to this, but is it actually working? All of this new added regulatory complexity, is it working? My personal view, of course, is that it is working. We are seeing change in a way that we have never seen before, so this will take time to work. But I think the focus now, from a regulatory point of view, will absolutely be the new digital regulations around the way partnerships and collaboration work across ecosystems, and absolutely around aspects of consumer privacy and consent. Now, when we look at technology, again, in the last few years, we have seen a lot of interesting new changes. We have seen a big shift to cloud, which I'll talk about later as well. We have seen more regulatory frameworks coming about from a fintech and from a digital banking point of view. The FCA was one of the pioneers of digital banking, because they launched the new digital banking license in 2012, which no one knew would happen. And of course, the MA has done it, and Hong Kong Monetary Authority has done it since then, but very few countries around the world have actually done it. So we are lucky in that in the UK, we have a fantastic ecosystem of regulators and new frameworks and support for fintech. And we've also seen a lot of open banking and API-based regulation coming up, and a lot of focus on cross-border payments, mainly because fintech is at the heels of banks, especially corporate banking, trying to reduce, well, it has impacted the profitability of international payments for banks, for sure. What we are seeing again in the last 5 years, again, this is a fairly new development, I would say kind of in the second phase of fintech since 2017, is where we see a lot more collaboration around that existing technology that we have built over the 20 years. If anybody has been around since the early days of fintech, let's say since 2008, and I was kind of around since 2010, we kind of focus heavily on the technology itself. So the whole conversation was about cloud, later about AI and blockchain, now about generative AI. But at the end of the day, the technology is just an enabler. And the whole idea is that we provide the customer experience, we provide the service that the customer is expecting from us in the fintech world. And that's an Uber, or that's a Google, or that's a PayPal even, where the experience of making the payments or making a banking transaction is so smooth that we don't realize there is banking involved. And with that in mind, we see a lot of these underlying technologies, of course, evolve and support the customer. And using embedded finance, for example, we see a lot of bank and fintech partnerships happen in the ecosystem. Big techs. Now, this is very interesting for me because this is one of those trends that I predicted, and it actually happened. And in 2020, in 2021, we saw a lot of big techs the Apples, the Googles, the Facebooks, the Amazons, they actually started doing a lot of fintech stuff. There was a lot of noise in the market where the big tech said, we are going to now partner with a fintech, and we are going to launch a new SME credit line, or we are going to launch a new digital kind of payments system, launch a lot of new platforms. Google, in fact, in the US, they partnered with 6 community banks, telling them, we will offer a front end, you just take care of the regulation and the customers, the onboarding part. So the Google was the front end for a lot of these community banks. Now, it's very interesting because we're only 2 years down the line from it, and most of them have shut down. So big tech made all this noise in the market, but what has happened in 2 to 3 years is actually none of that has worked that well. Google, I think, has partnership with 2 banks, and 4 banks have shut down their partnerships with Google. So again, one of the things that we are learning is partnerships do work. And it's a brilliant idea. In my mind, it is one of the most brilliant ideas that the front end is offered by the customer owner. And Google is the most common customer owner for most people in the US. And then the regulatory and the back-end aspects are taken care of by a bank. This is something that we always advocate for. But what we have seen is that it doesn't necessarily work, because people do still go to financial services provider sometimes. It could be an aspect of trust, it could be an aspect of branding, but the fact remains that there is a big role for fintech and banks to play in terms of customer ownership and customer experience. The future, I think, and I'm sure everybody in this room will agree, and my panel will agree, that it's around data. Now, data is very, very interesting, and we have talked about it in different ways over the last 10 years. And what I have seen, and I kind of feel is going to happen in the next 5 years, is new types of data coming in, and us using that data in new ways that we have never used before. I've already worked with banks on projects involving some of this, so geolocation data. So you walk into a shop, Zara, and based on geolocation, the bank can send you notifications saying, oh, you spent £150 in Zara last month, but you don't have that money in your bank account today. So just warning you positively or negatively, and also helping set goals. For example, if you spend £150 in Zara today, you probably won't make that trip to Bali in 6 months' time that you have been budgeting for. So very, very personalized, hyper-personalized data is useful in lending, in payments, in removing that bad debt cycle, and even aspects of behavioral biometrics, the way you hold your phone, the kind of bookmarks you have, the kind of social media words you use. On Twitter, are you using certain words, for example? All of that actually plays into your understanding as a customer for a bank and a fintech. And I think that is going to be a big part, and we see all of these data points being used in banks and insurance. And this is not even a prediction, because we actually see every single one of these data types being used in banking today. There is a clear shift away from on-premise or isolated systems. We have had blockchain, we have invested heavily in blockchain, but what we kind of see is that there is actually a big shift happening with systems going on cloud from legacy into cloud. So out of all of the legacy changes we have seen with banks in the last 5 years, we saw 19 of them use cloud, and for some reason, 8 of them still used on-premise hosting. I need to go and ask those banks why, but essentially there is a big shift, which means we can now start working on use cases like video onboarding or selfie-based onboarding. We can do biometrics. We can do passwordless authentication and things like that. So a lot of new interesting use cases that have come about. We also did a lot of research on Twitter in every part of the world, kind of trying to understand what are people saying though. Okay, banks are doing all these wonderful things and regulators are trying their best, but what are consumers actually wanting? And it's quite interesting. Out of all the fintech terms, the most common terms are quite boring words like risk management, data privacy, and sandboxes. And I was hoping when we started the research that we will see a lot of selfie-based onboarding, payments, and cheap payments, and words like that. But no, they care about regulations a lot. To kind of end my predictions or my attempt to do that, we looked at what will work in the future. And I believe personally that it's going to be partnership, ecosystems, and collaboration, as Nicola said, and I think we all agree with that. The corporate banking world is still slightly behind in terms of partnerships. We've done lots of studies. I speak all the time about retail banking partnerships, but corporate banking actually is quite low in number. The first partnership was in 2018 between a corporate bank and a fintech. And in 2020-2022, we had 25 partnerships, which is quite a growth, but still nothing compared to the retail banking world. In the future, I believe this is going to be a big focus for corporate banks. During COVID, we saw a lot of focus on SME banking and retail banking because SMEs is a traditionally untapped market. But corporate banking is again coming back to focus, mainly because the margins are quite high and the volumes and the revenues, of course, driven by corporate banking is quite high. So this is going to be a focus for the next 5 years, I believe, in the fintech world, where there will be a heavy focus on corporate banking partnerships with fintech, especially with the larger banks. As mentioned, this is because of a huge drop in fees and a lot of impact on revenues by non-industry players like the big techs, and also very few banks actually have a strategy in place in terms of partnership. So I think we are starting from a very low level, and it's going to be a big focus for the future. And I think it will also follow a model of embedded finance, which one of my panelists will actually speak about. And those 4 players that we talked about, which is the data, the people who have access to the data and ability to manage the data, the people who are building the product, it could be the bank, it could be anyone else. The players, for example, the Uber, who can plug in that financial data into their system, and the platform itself. I think there's a big opportunity for platforms in the embedded finance world in the next 5 years. And what platformification will actually help is improve the profits. I think that's the main focus for banks. The big tech competition and the competition with the fintech world, like I said, TransferWise or Wise, has actually affected the profit margins for international transfer in banking in a big, big way. And the same, there are so many case studies we can look at. So really helping with that. The technologies like generative AI and blockchain that will help better partnerships, and the consumers, of course, will continue to demand a better customer experience. So this is what I hope is going to come in the next 5 years. I'm happy to have a chat anytime. I'm leaving for London later this afternoon, but happy to have a chat if you have any specific questions on what I think. And this is a purely personal opinion based on data I have seen. So big disclaimer there. And I will try and predict the market for you. Thank you very much.
Thank you very much, Devie. The example there of the sort of Zara and the bank contacting you to say, well, you spent 150 quid. The older I get, the more I'm convinced that fairly soon I'm going to be living in a caravan in a wood somewhere with a tinfoil hat on. There's just something about this I do not like. I want to choose my friends. I don't want my friends coming up to me and knocking on the phone and saying, hello, let me be Jiminy Cricket in your head. It's an interesting point. Anyway. Devie finished off talking there about embedded finance, and that's the subject of our next speaker's presentation. Fiona Henderson is partner for CMS. So, Fiona, over to you.
Morning, everyone. So I'm Fiona, I'm a partner at CMS, and I specialise in fintech, including embedded finance. So we're in an era of ever-evolving alternative finance, and I think the answer to the question, where is the money, is not as straightforward as it used to be. So as with all good discussions on fintech, I'll start with a quote from Nick Milanovic to set the scene, which pulls out some of the key themes that I'll be thinking about this morning. In a world where everyone has a supercomputer in their pocket, the most successful financial products will be those that move up the funnel to meet customers where they are. And on this theme, I'll be thinking about where have we come from to set the scene, where are we now, and what's to come, my own go at predicting the future. So where have we come from? Holding money on deposit, managing payments, and originating and advancing loans were historically the exclusive domain of traditional financial institutions, the banks. Banks distributed financial products and customers came to the banks if they wanted them. The competitors of the banks were other banks. However, I'd say what we understand to be a bank and the role of a bank has certainly changed in the last, say, 15 years, and I'd say is continuing to change. The 2008 financial crash, which also coincided with a period of technological development, so the first iPhone launching in 2007, heralded in a modern era of disruptors to the traditional banking system, fintechs providing so-called alternative finance, the emergence of neobanks and firms applying for e-money licenses, and of course crypto. Bitcoin launched in 2009. And the challenge to the banks then was, is it possible to create a better financial services system or a different financial services system? If we fast forward to 2020, and the COVID-19 pandemic was a catalyst for changes in behaviour, most apparent at first, I'd say, in the e-commerce space. We saw a move to an increasingly cashless society and significant shifts in consumer habits. Businesses that weren't already online moved online to survive, driving an acceleration of business digitalisation. And as a result, I think the challenge to banks then became, do customers need them? So here in 2023, let's switch for a moment to think about what makes a fintech competitive. I'd say successful fintechs understand that the technological capabilities of what they're offering needs to be tuned into modern life and customer expectations, both of which are not static things. Financial products have to be available when customers need them and in a matter of clicks. Speed and convenience here are king. If you book a taxi, you're not paying in cash. If you book, say, an Uber, payment on your smartphone, payment is taken automatically from your wallet at the end of the journey. But Uber is becoming more than just that, branching out to other products to meet customer demand. So you've got Uber Eats, you've got its partnership with Lime Bikes, and you've got its partnership with Transport for London in terms of the riverboat. So now you can get a boat back from work. You can order a takeaway on your app all through Uber. And Uber car drivers are even paid on the app now. So you could say that Uber is aiming to create a platform for multiple and interconnected Uber services, some of which are financial services. And what I'm describing falls under the umbrella term of embedded finance, the buzzword of 2023 perhaps. But what is embedded finance? There's lots of definitions and possibly lots of disagreement, but to give it a go, I'd say it's integrated financial products provided by non-traditional financial institutions and placed in a customer journey or experience at the point of customer need. And the most often quoted example of it is buy now, pay later. I think you might also refer to the same umbrella concept or understand it better as invisible finance, frictionless finance, or integrated finance. So thinking about where we are now, well, as we're all aware, there's a cost of living crisis and a high interest rate environment. The Bank of England estimated that there was a 22 billion SME funding gap in the UK in 2019, and last month Goldman Sachs raised concerns about a projected $2 trillion corporate debt wall when thinking about the cost of refinancing corporate debt in the next couple of years. Pretty grim reading. So taking this into account, I've got 3 questions that I'm going to think about. What solution do alternative finance providers offer? How are they funded? And what then is the role of the banks? So what solution do they offer? First question, embedded finance has certainly changed the relationship between customers and banks, and the competition for these products has grown. Fintechs are now obviously direct competitors to traditional banks in the areas that were previously their sole domain. The main verticals at the moment for embedded finance, I'd say, are payments, banking, and lending. So to take a couple of examples in the B2B space, Liberis are a global embedded finance platform, and they provide revenue-based lending products. Revenue-based lending is designed for fast-growing and early-stage businesses. A cash advance is made available, which is then repaid out of a percentage of the revenue that they generate. So the idea is that they only pay as they are paid. So there's a fluctuating repayment profile in terms of their revenue generation. Another example is Uncapped, a multi-jurisdictional SME lender who provide funding options to SMEs, including fixed-term loans and inventory financing. But they promise a decision within 24 hours of an application. So generally, alternative lenders to SMEs, they don't require equity dilution, which is a typical feature of venture debt, and they rely on tech and data in their underwriting and credit scoring processes to aim to respond more quickly than, say, traditional financial institutions. And many of them are experts in the sector or industry that they're lending to in terms of how they manage their credit scoring and the tech related to that. So embedded finance providers aim to streamline customer experiences, solve for a particular problem, and use innovative tech to do that. So the second question, how are they funded? I'd say fintechs have certainly not removed banks from the funding equation. Now there are complex funding layers with banks funding the funding, capitalising fintechs to allow them to grow their own financial products and market share. Sometimes the layers are in the background. Customers may not be aware of their own providers' debt arrangements or how they're capitalised. Other times, the marketing to customers leverages on the power of these partnerships. If you look again at the example of Liberis, they joined forces with Barclays Card last year. The product is provided by Liberis and offered to Barclays Card customers, and it's packaged as the Barclays Card Business Cash Advance. So what then is the role of the banks? Is it as partner now rather than competitor? And if so, why do fintechs want to partner with banks? My own views, arguably to build brand awareness and increase customer trust in their product by association, to access a larger channel for distribution and to gain product funding. For both parties, it offers an opportunity to learn from one another, and collaboration and partnership have become a new route for survival, but more than that, growth. A recent report by Bain & Company on customer behaviour and loyalty in banking found that retail banks' ability to provide personalised services has a direct correlation to its loyalty score. So in this respect, I'd say another descriptor for embedded finance could be personalised finance. So what's to come? If we start with the stats, the global buy now, pay later market size and the embedded finance industry are both projected to grow. The embedded finance figure is for the US, but I think it's a good indicator of what's to come generally. Research by Freedom Finance has found that 9 out of 10 of the most valuable retail banks in the UK are offering financial services to their customers, and none of the retail banks outside of the top 10 provide a full embedded lending offering. And I'm not sure that's a coincidence. As an example, John Lewis recently revealed its 5-year plan with a pledge to spend over 100 million expanding its financial services business. So lenders now sell sofas. So to round up, 6 predictions from me looking into the future. 1, more consolidation and partnering. Established fintechs will become more acquisitive, perhaps, seizing opportunities to amalgamate their client base, data and product offering with competitors. The big players will perhaps become bigger. And I also expect partnering between fintechs and banks to really take off. 2, innovation in debt markets. I don't think banks are being left behind. There's little choice but to innovate. For example, earlier this year, NatWest acquired an 85% stake in Cushion, a pensions and savings fintech. Further, banks are dedicating more time to blockchain and DeFi. The World Bank and the European Investment Bank have both issued digital bonds. And last year, Goldman Sachs cited their ambition to build Wall Street on a blockchain. 3, an increase in B2B buy now, pay later. I think overall this market is less saturated than B2C, and businesses expect to pay on credit terms. An example of a firm providing the solution is Hokodo. They work with B2B merchants to help them sell more by offering payment terms to their business customers at a checkout. An interesting option for merchants from a cash flow perspective in the current environment. 4, a focus on more sustainable growth. I anticipate that fintechs will be thinking about whether or not they take on institutional investment or what the terms are, bearing in mind their own growth strategy and the current cost of debt. Those in the fintech supply chain may also be thinking, what is the source of funds of alternative finance providers and how reliable is their funding, particularly in the wake of SVB. 5, a spotlight on regulatory compliance. So thinking about the new consumer duty, possible future buy now, pay later regulation, and certainly the various Dear CEO letters that have been issued by the FCA recently. I think successful firms understand there is a careful balance to strike between speed and automation on the one hand and positive customer outcomes on the other. 6, growth in untapped verticals. So in other words, embedded finance is not just for shopping. It's much broader than buy now, pay later solutions, and perhaps we're only at the tip of the iceberg. Lots of reasons, but to give a few, I think the most successful products will solve problems and reduce friction. E-commerce was arguably an obvious target for embedded finance because the end-to-end customer journey was already online. This isn't the case for other sectors. And even if it may not be true to say that all companies are or will be fintechs, most, or more cautiously, many businesses will now need to be online businesses in some shape or form. To give some examples of this growth in untapped verticals, Curbwaste are a software-as-a-service company who provide services to the waste management industry, describing themselves as software for haulers by haulers, and they've got plans to expand into revenue-based lending. Oxbury Bank, the agricultural bank, raised funding twice last year to originate 650 million in agriculture loans to UK farmers. So perhaps the 2024 buzzword is going to be FarmFi. Embedded finance gives firms the ability also to cross-sell products in other verticals if they have a strong existing customer base or they want to establish one. So think Apple and Amazon. So in terms of the question I posed at the outset, where is the money? In 2023, this isn't a straightforward question, and the line between banks and fintechs and their roles may continue to blur, overlap, and certainly involve. So as Simon Taylor would say, all finance is becoming embedded. A last note from me, we've got our exhibitor stand upstairs, and many of the team are here today, so please do come and see us and continue the conversation on embedded finance. Thank you.
Thank you. Thank you very much, Fiona. That business about lenders now sell sofas. I was talking to someone last night who works for a big law firm, and one of the partners there, one of the senior partners, had decided to treat himself to a nice big Aston Martin. You know what the deal breaker was? He had to get the Tesco club card points with it. There was some sort of deal with Tesco, and he got the club card points off that, and it probably got about $5,000. Just ridiculous. Absolutely ridiculous. Anyway, Fiona asked the question at one stage, do customers need banks? Our next speaker is going to be hoping that the answer to that is yes, because Peter Crouch is Chief Information Officer for Business and Commercial Banking for Lloyds Banking Group. It is well established, it's been around a long time, and he's going to be talking about how to transform a 250-year-old bank. So, Peter, over to you.
Thank you. Good morning. I'm delighted to be here. My first Fintech Summit, and great that we're celebrating the 10th, and I'm here for that. As Mark said, my name's Pete Crouch. The job title and the role, interestingly, isn't international footballer, but at the top of it says CIO, as we said, for Lloyds Business and Commercial Bank. But what that really means, I think, is I have got the ability to lead the transformation of a 250-year-old bank with the aspiration of becoming the UK's largest fintech. And maybe let's explore that. So if we just think about Lloyds, at the cornerstone in banking for over 250 years. Over the years, we've acquired, and through the acquisitions, 15 brands. We've got about over 26 million customers, 60,000 employees, 9.1 billion in net income. So by any scale, we're big, and we know finance. So let's look at the technology side of that. We set up the technology department back in 1972, so about 50 years ago. And you can imagine how that's evolved over the years. We'd have started with the channels, with branch, evolved to telephony, and moved forwards. We've built products that suit, in essence, all of the UK population. And we manage that estate, I think, pretty well today, serving half of the UK adult population with products and services that matter to them at the times that mean most for them. On that journey, we've paved the way. We're proud to say that we are the UK's biggest digital bank with over 20 million active customers. So again, you'd say we know a little bit about technology. So we're big, we know finance, we know technology, so are we the UK's biggest fintech? Well, I can see from the audience really as sort of your eyes glare into me. That if we're honest about that, the answer's no, and we've got a lot more to do to transform ourselves into what we would see as a truly next generation financial services provider. And I think the key to that, as we look at what we've got, is starting to bring the fin and the tech a little closer together. And in effect, what we've got really in something that I should be very proud of the 250-year-old legacy, but I've got a big super oil tanker in the way that we operate in essence. And the take. That's quite good. Do you see the way I did that?
Yeah.
It takes a bit of practice, that, Mark.
Got my attention.
Yeah, good. So the way the shout from the back, and I won't try and do it twice, the shout from the back comes, it takes a while for the boat to pivot. And what we're trying to do in our operating model is create those speedboats in the way that we're structured that can get the pace and the efficiency and the drive and the autonomy that we want. And really, when you think about that, you know, the trick shot for us will be how we coordinate all of those speedboats as we try and get that pace going, and how we coordinate, keep them cohesive with the progression and pace that we want. So let's just have a look. If I think I know I've got a North Star vision to become the UK's biggest fintech, but what is a fintech? And we just talked about it a little bit in the previous two speakers. But for me, there's 5 things I think that are core to this. Firstly, disrupting at scale and really challenging the status quo of traditional banking and finance models, and being able to do that at scale. And we've talked, haven't we, again, just over the last half hour, about that ecosystem and partnerships and how important those partnerships are. And I think for us, it's about how we create more of those alliances to create the seamless, frictionless services that our customers want. And there's a lot for us to learn from the outside market. And if you think of the way that the Airbnb and Uber and the examples used before have really changed the way the market. And could we really say that we've done that at Lloyds. So number one, disrupting at scale. Number two, operating, partnering in that ecosystem. And critically important, number three to that will be obsessing about the customer. And instead of me offering the products that I think they want and banking products, but really thinking what matters most to them in that end-to-end service and connecting all of the dots in that end-to-end service so nobody really rocks up and asks and wants a mortgage, but they definitely do want a home, and they want all that surrounds that makes it a frictionless and seamless journey for them. I think the last two coupled with that is we need to innovate at pace, the ability to experiment, explore new ways, and be agile and be able to pivot differently. If you think of the macroeconomic environment at the moment and just how we pivot to what's happening there, that's a great example of what we've had to do within the bank as we've seen the interest rates rise month on month over the period. And then really trying to think digital first, modern technology, and being comfortable to explore with those technologies to see what that can do. So maybe that's a picture of what I need to deliver. And so we've tried to then set out, so what's the work to do? What do I need to do to transform the bank to be a truly UK largest fintech? And we've said, I think the work can be roughly coordinate into 5 core steps. Maybe it's not easy steps, as I've put here, which is creating an innovation mindset, revolutionising our technology, modernising engineering, investing in talent, and then forming partnerships. And let's just explore those a little bit as we go through. So the first one, creating an innovation mindset. And I think to become a truly digital-first organisation, we've got to strive to disrupt, but to be able to disrupt responsibly. We've got to have a progressive attitude, or a more progressive attitude to risk, such that we can get those innovative products out to customers. So in effect for us, we've probably been evolving faster horses, and we need to think differently to how do we have faster horses. What we've done in the bank, because I think all of this in this first part really drives down to culture. And as we're a purpose-led organisation, helping Britain prosper is our purpose, and we've really looked at what our values and behaviours would be to support that, with a greater focus on being bold, being innovative, customer trust. So the top 250 of us have been through a rethink as to where we want to take the values and the culture of the organisation, trying to get that into our DNA. We've got 6,000 of the organisation now as catalysts, and the trick shot is to take that out across the 60,000 and really embed that DNA into the culture. That will take time, because we're used to being safe and reliant, and we've got to try and mix that up with how do you start to experiment? How do you start to iterate? How do you get comfortable with the ability to fail when, as we heard before, we've got regulations and everything that we need to be really strict to? So that experimentation, that iteration, started trying to look at zero-based design. Back to that point about faster horses, it's no point just iterating what we've got, but really going back to the drawing board to think what the customer wants and trying to iterate that through. And then lastly, what we're doing within the organisation, and you'll see it through some of the hires that are coming in, everybody's a technologist. Everybody has to understand technology. It's moving at such a pace that we need to keep ensuring that everybody's on that learning journey. Number 2, as we revolutionise our technology. It's fantastic that we've got such a legacy, but as you can imagine, with a legacy comes a cost of ownership. We've got thousands of applications that we've never really gone the last mile to tidy up. So first focused for us is to simplify the estate and decommission the applications that give a little bit of capacity for us then to really drive modernisation and the sort of where we want to take the speed and the pace and the technology towards. We've put 3 billion of investment behind that. So we recognise from the board down the importance of technology, and we're investing in the technology and the people and the processes to be able to do that. We're trying to reduce, as I say, the estate today, and trying to shrink, in effect, the surface area that we've got for failure and what we have to look after. The total cost of ownership for us, if we do nothing, in effect means that we'll be spending all of our investment budgets to keep the lights on. So we have no do-nothing option. We've got to tidy the house before we can then really drive the work. And that's getting out of some of the non-strategic platforms, rethinking data centres, and we may still be in data centres, Devie, but we'll talk about that later. And then starting to adopt more modern technology at scale, so cloud-native design philosophies and a more modular micro API-driven framework that will start to drive to. 55% is what we said we'll get to for cloud by 2026, and starting to try and think more investing into evergreen technology. And then lastly, coupled with that, we'll start to think of those Horizon 3 type technologies, the blockchains, the AI, and start to get a little bit more comfortable about how we can experiment with those to really drive some different thinking. As far as modernising our engineering, if what I've just said was the what, then modernising it is the how, and the practices that we would want to follow to do that. So we know we're striving to try and disrupt the market, and in effect, what we're doing is really focusing on cloud and DevOps first, which essentially give us the mandate to have better breaks. And it's quite an important point for us that I think we've always worried about if we go too fast, what's the outcome for the customer? And actually what we need to invent is the better brakes so that we do feel confident to go fast, because we've got the brakes to be able to slow us when we need to do that. So we're starting to instill a culture into our DNA of that modern technology mindset. Start to try and set out, if you imagine all of the different tool chains and pipelines that I've got throughout the estate that we've got today, the inconsistency just drives cost through the organisation. It means that we can't keep, how do you keep track of what's happening across that? So trying to bring that consistency, trying to set the guardrails that the engineers can operate within. So you manage the exceptions, in effect. You don't manage all of the noise that is around it. So you give the freedom in a framework for the engineers to operate within. So that's the modern engineering. The other point to say, just around the agile ways of working, and we've got, as many have, we've got 32 platforms set up. We've moved that closer to the business and really starting to drive more agile ways of working with smaller releases going in, getting the customer feedback and responding to that. Last couple, and I know I've sort of got a couple of minutes left. So investing in talent. We've relied over the past on outsourcing IT cheap, and we've relied too strongly for delivering our business and therefore the technology on partners. Done a fantastic job, but we now need to pivot to invest in stronger in-house technical talent. And we're on that road to do that. You'll have seen out in the market that we've probably the last bank standing, and I did it for Barclays and I've done it for other organisations. But we set up our first non-UK centre in Hyderabad, the Lloyds Technology Centre over there. That's a talent play, not a cost play, and to go after the talent that we want out in the market. As we do that, we'll start to invest more in the engineers that come in, the pace that technology is changing, more in the learning that we have to do to continue to keep current. So it's more behaviours that we start to bring in, because the technology anybody can learn as we start to go through that. Just as far as learning the technology talent, and then really I think across the organisation, as we said before, you'll see from the CEO down in Charlie Nunn, who was a technologist himself, the CEO of the retail bank in effect was a CIO, and my boss Ron van Kamenaard joins from ING, and will really drive a change in what we do. So the last one, in just forming the partnerships, And we've said, if we want to be digital first, we need to start to open up our ways of thinking, right? So that I think in the past that the fintechs are not the competition, but rather the secret sauce and the extra little part of the recipe that makes a success for us. And we've got to start to think through how we make it easier for us to engage and learn from those fintechs, to bring them on board, to get those end-to-end services working. So a lot more to be done around that, being digital first, being data-led, and trying to drive those customer experiences. We've got some things set up with Fintech Scotland about trying to look at the guardrails for doing that in criteria, and an innovation program to bring on the fintechs. So as we all do, as you go to ChatGPT, and other than asking, am I the real Peter Crouch, I did say, how do you transform a 250-year-old bank? It said it's a monumental effort, and it certainly is. But I think we've got some good momentum. We're on the right tracks. We've got the recipe, and we know we'll fail en route and have some stumbles. But if we can get that DNA of a new culture, we'll be happy failing because we'll learn as we go through. And definitely we've got the ambition and a North Star to be the UK's biggest fintech. Thank you.
Thank you, Pete. Now, I think it was step 5 in his not so easy steps was partnerships. It's an easy thing to say, not a terrible thing, easy thing to actually achieve sometimes. Our last speaker on this panel is Andy Elphick, Head of Innovation at Barclays, who wants to talk about the importance of partnerships, and how to actually make them happen. So, Andy, over to you.
Thank you very much. Just walking up there, I was almost blinded by the Barclays blue on the floor there, so just take a minute to reorganise myself. Look, I mean, I think from my perspective, we've heard 3 fantastic presentations so far, giving a lot of information around what is happening in the sector at the moment. And I thought Peter's presentation was really interesting in terms of Lloyds, their approach, and how they're looking to drive innovation. And it helps me a little bit in my presentation as well, because I think what you got, I hope what you got from Peter's presentation was that technology in banking is an incredibly complex and priority-driven environment, which is really hard to navigate when you're inside an organization. So what I want to talk about today is about how we can help to drive partnerships and bring the fintechs in, and what we're trying to do in Barclays around that, and try to bring to life some of the difficulties we face and you face in terms of working with a large-scale organization like a Barclays. First off, though, I think it's important to talk about why collaboration. We've heard a lot about collaboration, and its partnerships are going to be really important for us going forward. But why are we doing it? Well, for me, collaboration allows us to connect technology, talent, and trends from across the global fintech ecosystem to accelerate innovation and growth in the financial services industry. One of the parts there I think is really important is the global fintech ecosystem. It is massive. So when I'm looking at my job, in my role at Barclays, I'm not thinking about just looking at any fintech. I'm looking at trying to find the best fintech globally that we can work with to drive the solution that we're looking to drive, whether that be to support customers, whether that be to support clients, or whether that be to support colleagues. And what I will be forensic in and driving my team to do is to find the best possible solution for us, wherever that may be. Okay? And I'm pleased to say that with my interaction with Scotland, there are some fantastic solutions in this region, and some of them sitting in this room right now. So, look, it's great to be here today to talk to you about this, but I'm looking at everywhere from India to America, to Canada, to South America, wherever it may be. Okay, so what are the challenges? So I think the first one is culture. You know, banks have to make a decision on whether to build or to buy or to partner. And often when you've got a large-scale technology team, I think Peter was talking about big numbers, we've got something like 30,000 technologists. The first thought is to build, not to partner. So how do we start to build that culture? You know, when we're thinking about the culture in an organization, I work with a lot of fintechs, you know, agile versus waterfall. You know, MTP, if you've heard of that, if you've worked at a bank, you might shudder a little bit, but midterm planning and the financial cycle in a bank versus what's my burn rate? How am I going to get this product to market as fast as I possibly can versus I've got to go through my project plan, I've got to go through this board, I've got to go through this committee, I've got to get it to a point where I can actually start to build it. And sometimes that can take quite a long time. So when we bring fintechs and the bank colleagues together, sometimes that jars. You know, when I think about fintech founders, many of them have worked at a bank, many of them had an idea, many of them had that idea not listened to, left, set up a company, and now are trying to sell that back to the bank. That isn't necessarily the easiest relationship to partner and to enable to happen when that first comes in. So I have a team of people trying to make that a much easier conversation and an opportunity to drive more action-orientated, fast-paced delivery rather than, you know, a standoff on, well, we could build this, we could do it better. Okay, so the culture part is really important, and sometimes we need help to do that, and we have programs and ways of doing that that we hope enables the fintech to land fairly softly in our organization. Process challenges. You start to work with the bank, you get swamped with requests for information. You know, it must be really difficult to deal with that. The only thing I can point to for everybody, really, rather than going into all of those processes, which will bore you all to death and take quite a long time, is that around about 2021, there was an activity that was driven by HMT called the Fintech Pledge. Hopefully you've heard of it. It's gone a little quiet, but we need to keep that alive. It's a principle I really believe in, which is how can we help fintechs work more effectively with banks? Lloyds are a partner on that. NatWest are, Santander, TSB, etc., etc. If you go onto their websites, you should find something about the Fintech Pledge, and on that website, it will give you not only how they tend to connect with fintechs and partner with fintechs, it should also give you a point of contact. So if you start to find blockers in working with that organization, you should be able to break those barriers down, and you should be able to start to talk to the people that can help you get to an answer. Now, that answer might be, we can't work with you, or that answer might be, we want to work with you. What I find when I talk to people out in the industry, and I go to events like this, someone will come to me and say, well, I've been talking to X person in Barclays, it's been going on for 9 months, I don't know where I am. I don't even know who they are, right? So make sure you're talking to the right people in the organization to help drive that partnership for you. Procurement cycles, again, you'll be deluged with information. Again, look on the websites, all the information is there. And if you're struggling, then go through the Fintech Pledge route and someone will help you to demystify some of those actions that you'll need to go through. But we have to go through a robust procurement process. It's really important that we are seen to be I'm trying to think of the word, it's completely gone, but we will be checked on who we partner with to ensure there's no conflicts of interest. So we have to go through the proper process and bring people into organisation in the right way. It's good for you, it's good for us, and it builds a real, true partnership, not just because we might know someone. We have to do data-driven testing to ensure that we are finding organisations that are enterprise-ready. The day of looking at a PowerPoint and finding out that someone has been invested in because they've looked at blockchain are gone. We can't take the risk on bringing somebody in who isn't enterprise ready and isn't able to support our needs, particularly when we're so customer focused in the services that we want to deliver. Data, I think we had a little insight to data from Peter there, and the other speakers as well, to be honest, but you know, if you are looking, your solution relies on customer data, it's going to be difficult for us to give that to you, unless it's already in the FCA sandbox or it's something that we can provide. So when you're thinking about the solutions that you want to spin up, if you're an aspiring entrepreneur, think about something where you can you really believe it's not going to be something the 30,000 technologists in Barclays are going to want to build, or it's not going to be based on data that we can't give you. So start to think about how you can impact the industry, but in ways where you can quickly access the information you require. So how do we try and structure it at Barclays? And this is structuring it to help support the fintech community rather than just everything we do. But we have to think about our innovation approach. So first off, we have to decide, do we want to build it, or do we want to buy it, or do we want to partner? You know, those 30,000 technologists are working on real, impactful delivery every day of the week. There's something like 2.4 billion spent on technology change every year in Barclays to improve things for our customers. So we have to make sure that when we're partnering on the things that we really want to bring people into and they can add value on. Okay? So when I think about that partnership piece, I have a team within my organization that does tech evaluations. They spend their whole time looking at fintechs or organizations out in the market space around particular technology or business opportunities that we have for new products and services that we could bring to market, and they're basically scanning the market all the time, all around the world, looking at what we could bring in and how we could do that. We're providing reports right up to Exco on that kind of information, and they're really interested on the new opportunities that we could take on as a firm. I've also got a team that is looking at driving IP. So how can we make sure that if we have spotted something in the bank, that we're registering that IP and that we're creating patents? So that when we're actually having conversations externally, we know where we stand as a bank, we know what we are protecting and where we can work, and the daylight between those two things. So I work very closely with a bunch of IP lawyers who are fantastic at their jobs. We also have an idea management platform, so we're trying to get ideas from colleagues that could actually turn into propositions that we can work with fintechs on. I also have a design thinking practice, so I'm thinking about the customer, I'm trying to look at step change solutions that will drive change. Many of those solutions will not be delivered by our internal teams. They require me to come out and find fintechs that can help and support that. Okay? Then once we get to that point, and I'm starting to look externally in the market, then I have a number of different things I can do. You may have heard of Rise. Hopefully you have. We have fintech platforms, one in London and one in New York. They house about 110 fintechs. And so we're working very closely every day with bright-minded individuals who are driving the future of financial services. It's a brilliant place to work. Not only is it inspiring to work alongside these people, but also it's fantastic in the base that it's giving me and the organization I work in an understanding of the future of hybrid working. You know, to see fintechs that have, I don't know, 80 people working for them, but they don't take 80 desks. They use an auditorium and they use a meeting room, and they rotate their people through to make sure that they have the best of home working and office working is really interesting to see, and an example of how we've all had to change our working conditions post-pandemic. I'm pretty close to time, so I'm going to zip through a little bit more. We have programs, so we have Rise Startup Academy and Growth Academy, both really important to us. They give us a view of how we can start to work with fintechs, mentor them, partner with them, and in many cases invest in them if that's the right thing to do. We rarely buy fintechs as an organization because we believe that letting them breathe in the industry and work with more customers and more clients actually helps to improve the product and gives a greater opportunity for growth for both that organization but into UK PLC and the economy. And we also look at ecosystems. So I'm here today as part of wanting to be up here in Scotland, but also I'm closely aligned to Fintech Scotland and what I would say is an incredibly vibrant ecosystem. So look, I'm just going to zip through these last points so we can move on. But for me, the principles of the Khalifa Review are really, really important. If you haven't read it, I would suggest you do. But you know, when we're thinking about the investment, when we're thinking about all of the elements that come through that Khalifa Review, including the regional hubs, it's really important to see that we continue to drive that. Fintech founders shouldn't be brilliant because they're just based in London or have to travel to London. They should be brilliant where they live. And we should connect with them where they live. and seeing the growth of Fintech Scotland, seeing the growth of the ecosystem here is, I think, fantastic and an example to other parts of the UK on how we should be doing this stuff. Incumbents, obviously, we've got the build, buy, and partnering. Hopefully, we will drive more into partnering. I think that's really important, not only for us being able to continue to drive customer-centric solutions and real value to the customers in bringing new and innovative technologies faster to them, but also because we can't build everything, right? And we have to get to the culture of understanding that. Fintech talent development, I think, is really important. Khalifa Review would say we need to look at visas. I think that's important. But for me, some of the stuff I'm seeing in the universities across the UK and in Scotland is fantastic. Some of the fintech courses and the talent coming off those fintech courses are superb. And I'm looking and trying to find ways to ensure that we're bringing them not only into someone like Barclays, but also into the fintechs themselves, because you can get people who are ready, understand the market, and can hit the ground running. And then the final point for me is we do need greater support for the scale-ups. I think I saw something on Fintech Scotland yesterday where 58% of the investment had gone into scale-ups, which is fantastic, but more needs to happen. You know, we've got some great examples of unicorns. We need more, and we should be able to do more. So that's something I think we need to focus on in the next 18 months to 2 years. Anyway, I think I'm up to time, so thank you very much.
Thanks very much, Andy. Right, there's an opportunity now to ask questions of any of our 4 panellists this morning. So there's a couple of ways of doing that. You can either use Slido, if you haven't already sort of scanned the Q code, you can do it that way, and it'll come up here. I'll read the questions out for you. Or we can do it old school, basically just stick your hand up. We'll get a microphone to you. If you could identify yourself when you get the microphone, just say I am, and where you're from, which company you're from, more relevantly, where you live is up to you, but which company you're from, and then ask the question. So does anybody have a question to begin with, please? Right at the very back there. Can we get a microphone to them, please?
Yeah. Hi, everyone. I'm Sakshi. I'm the Vice President Technology from Morgan Stanley. My question is like how other banks are thinking about regulation for the chatbots, as it's a lot in the picture nowadays. Everybody is having Ask Cyber, Ask HR, Ask Finance. So how are you doing it at your firms?
Thank you very much for that. Who wants to do that first?
Look to the bankers. Is this microphone on?
I'm not entirely certain it is. Try again. You
can hear it, okay. So the question, as far as how we're using Gen AI, large language modules, chatbot, etc., yeah? Right. Yeah, perfect. That's fine. So, I mean, this is where we're going to get the balance, as I was talking through earlier about the pace versus the risk. So we have a team set up internally, starting to look at that, starting to engage with externals and doing some experiments already. We find it easiest to do those experiments where it's internal data and where we've got a human in between us and the client or the customer. So we're doing those, and we'll start to get some confidence in doing that, and then we'll start to grow out from there. Even as we start to look at how we drive some efficiency from those, if we start to use it for Copilot internally is fine, or we start to look at it for how we might reimagine some of the software that we've got. But we've got to be very careful, I think, in doing that, as who's got the IP and all the legals and things around it. So we're engaged. It's a cautious approach, learn, try, and then scale it.
Okay. Andy, any thoughts?
I would totally agree. I think our approach is very, very similar. We meet weekly, to be honest, to review the use cases and to decide what we can do and not do, what we might choose to do internally, what we might choose to use public data in a sandbox and test. So it's everybody is, I'd say, hyper conscious of not only the opportunity but the risks. The only thing I would say from a fintech perspective or any tech partner, and I don't know if you find this, Peter, but please let us know before you deploy any ChatGPT into your technology and then just release it, because that might mean that you won't be able to continue working with us. So we need to go through those risk cycles to ensure that we're doing the right thing, because we've got to protect our customers.
Can I ask an associated question of Devie? I get the impression as a non-industry insider, well, I'm not an insider, I don't live in this world at all, but would it be a correct assessment to say that the older institutions are essentially always playing catch-up?
And it is, and my heart goes out to Lloyds Bank here, because some of the banks have a huge amount of legacy. And the older the bank and the larger the amount of legacy. And I think there are two ways to replace legacy. One is by putting a whole digital layer on top of it, ignore this legacy underneath, which is not easy, or replace system by system. So it is always going to be catch-up, and the amount of catch-up you have to do depends on the amount of legacy you have. So it is a tricky thing, of course, but I think different banks have different approaches, and it's working well so far.
Okay. There's a question there, Fiona, down at the bottom, anonymous, basically saying, it's disappeared now, needless to say. Hang on a second, I'll see if I can find it. I don't know what happened to it there, but it was there a second ago and it's gone now. Yeah, there you go. What's the biggest challenge of driving change in a big traditional bank? I'm going to open that out and say, not just banks. What slows down or stifles progress?
I think it's a lot.
Pull the microphone towards you.
Sorry.
And I think that applies to everybody. Just pull the microphones towards you. We're dangerously close to hell round. Right.
I think previously it might have been what role the banks were going to play in terms of the points that I touched upon. What role were they in the ecosystem? Were they competing with fintechs, or weren't they? And were some of the disruptors in new technology, were they trends? How embedded would they become in the industry? But I think that's clear from what everyone said today, that it's here to stay, and the role of the banks is not necessarily as competitor. It's something different. So lots of themes that everyone's talked about: legacy, technology, and probably culture as well.
Yeah. So I think just to add to that, then, so I think culture will be big. People have operated in the world of make it perfect before you release it, spend a long time, don't impact, and therefore that gets into your DNA. So then to change it and say experiment, fail, learn is very different for people, and they've got to see the actions and aligning to the words and the actions aligning. So we've got a lot to go through there, and it sounds trivial, but there's an awful lot to do. As I said before, when you've got so many systems, if you like, the blast radius of doing something can be quite big. So actually the whole simplification is super important to get right, because then you've got greater focus on what you need to get right and how you need to manage it. So I think that's the other big one. Just to what Devie said earlier, it's interesting that if I just put a front end over the back end, if you think about it, it doesn't do anything from a total cost of ownership. I still have to run that system. I still need a person who knows how to run it. I still need some infrastructure to run it. And over time, the currency of those just deprecates and I start to run into trouble. So there is no real other option than to invest in getting rid of it. And then you've got to just sequence the prioritization of how you allocate money.
These Digit conferences, Andy, basically they cover all sorts of aspects of human life. I'm very comfortable with somebody experimenting, failing and learn with a shoot-'em-up video game. Not quite so comfortable when it's my money you're playing with. When you talk about experiment, fail, learn within the banking sector, what are we talking about there? How bad is the failure? Give me an example.
So I think you've got to do that in a safe space. So it isn't just let's experiment and fail fast and iterate quickly. There are certain things where you can't do that on. So there are certain applications in a bank which you can add a fix or an upgrade once a year, because the regulatory requirements of that system only allow you to do that, versus other types of systems and other customer-facing opportunities where you can be a little bit more open in the way that you do that. So we have a sandbox where we test, we ensure that before we take anything live, that it does what it's supposed to do, and it supports the customer journey that we're trying to deliver on. We can't be fly by night on this kind of stuff,
Yeah.
So I hope that if you're with us, I hope your money's protected.
I'm not, but don't take it personally.
I wasn't. Don't worry.
Any questions from the floor? Oh, there's one there. There you go. Again, if you could identify yourself, please, and ask your question.
Hi, I'm Lloyds from Aegon. I think my big questions is pretty much everybody has mentioned, the use of customer data and maximising the benefit out of that. Now, for a fintech startup, that's easy because you make it clear what you're gathering, why you're gathering it, what you're going to do with it. For really big companies, like Lloyds, Barclays, Aegon ourselves, we've got a huge amount of data that we've gathered historically. And if we're wanting to do some of this fintech stuff, that's a completely new use of that data. So, how do you tackle that and stay on the right side of the data protection regulations?
I'm going to open this out, not just to the two banking guys at the far end there, but to yourselves. Because this, I think, has got wider implications. If all sorts of industries are trying to catch up in this sphere, Devie, then how do they go about doing that? How do you be an honest broker with a customer who's been operating with you one way and now you want to operate in another?
Yeah, I think, there are a lot of solutions to that problem, and we see open banking, for example, as a great solution to that, because you don't have to create everything on your own from a banking point of view. And like I said, I'm a huge supporter of banks surviving because we need banks to survive. So I don't think fintechs are going to kill them, or the huge advantages fintechs have is going to affect banking. I think consumers are almost ready to accept the fact that banks are going to be a little bit behind in customer experience, and which is what we have seen in our studies. I can share tons of data around this, but one interesting thing I found was when we surveyed people with multiple bank accounts and people who have a Lloyds bank account, for example, or a Santander, and a Monzo and a Starling, we asked them, what do you think between the two of them? And a lot of the times people say that, I need to have a traditional bank account anyway. That's my primary account. And I've had this for the last 20 years. I'm not going to switch. Only 3% of people switch out of their traditional bank accounts a year. So we find that the banks are still the primary accounts for a vast majority of people in the UK, maybe except students. And we find that the customer experience being a bit laggy, a bit behind, is okay with the consumers. And that's because of a huge amount of trust and brand placed on the banks. So I think they are trying their best with, and it's, by customer experience, we always think of the app, but that's not the app we are talking about. It's the documentation, it's the ease of access, it's the, what do you do when all the branch and cash machine in your high street is shut down? So those kind of things, and we have a very interesting question on financial inclusion, which I would love to answer about this, because what do you do when your bank shuts down? But it's customer experience across a huge spectrum, and I think banks are okay, even though they're a bit behind the fintechs.
I'm going to come to that question now, actually, but I'm going to put it to Fiona for a start, and we'll come back to you. Given the importance of financial inclusion, Nicola mentioned, and the increasing age of the UK population, are we in danger of excluding a whole older generation?
Possibly, but we shouldn't. We shouldn't. I guess that the threat to it is yes. You could be, but the opportunity is what products and solutions can be offered to target a different generation. And it's about the themes that I spoke about earlier, meeting the customer where they are. And if there is a perception where we have a generational split, how are those customers best served, and what are they looking for? And there was an interesting stat recently in the UK Finance Report that showed, for the first time in a while, there was a kind of reversal of the trend that people were using cash rather than the cashless payments continuing to increase, linked people posit to, is it older generation, or some people are saying, that there's a kind of fear about the robustness of the economy, and once that settles down, the trend will continue. So I don't think it should be. I think it should be viewed as an opportunity.
Devie? I'll come to you in a second.
Yep.
Yeah, so the financial inclusion is a topic that's very close to my heart. So very, very quickly, one of the big dangers of branches shutting down is that there is a certain financial exclusion that happens with the older generation. And we have seen that happening actually across the UK with a huge I would say about 50 to 60 per high street branch on average in London, it could be different in other parts, are left out completely from the banking system. So this is a very, very big topic in the mind for the government, and I've spoken to various parts of the government about this. And the UK stance, especially in partnership with organizations like Age UK, is that we will work hard on financial inclusion for the older population or those who are struggling with technology, because that's not acceptable. And I think the UK stance is very clear and very strong on this. We also look at Sweden, and this is very interesting because in Sweden it's 99% cashless as a society. So we look at what has happened there, and we found that since they've gone cashless, actually domestic abuse has increased, and a huge amount of older population have been left out of financial access. So Sweden is a great case study to actually go and have a look at what will happen to a 100% cashless society. And domestic abuse has increased because of lack of access financially and lack of savings in cash and things like that. So it is a reality that 100% cashless society is not great. And I think the UK is only targeting about 80%, I think, which is great. And yeah, this is an area which is really coming to focus for the government to work on. It's because of the shutting down of branches.
Right, thank you. Andy, sorry.
Yeah, look, I probably don't know the stats, so I'm just going to speak from the gut more than anything else. But, I think fraud has a big part to play in this. I think older generations are incredibly worried about fraud. They get an immense amount of spam. They get an immense amount of unbelievably sophisticated emails. My parents are aging. I get a call probably once a week. Can I click on this? No, you can't, Do they want an iPhone or a smartphone? No, they don't. Do they get one? Yes, because they bought a car where the only way they could get the sat-nav to work was to buy an iPhone. We've still got to think about the customer here. And it's not necessarily, I think it's very easy to say it's all about branches, and branches do have an important part to play, but I think it's about education, both to our younger generations and our older generations, to help them to keep pace with the change that we're seeing in technology that many of us sitting here just take for granted because we're in it. But if you're not in it, it's scary as anything.
Well, what Devie was saying there about 99% cashless in Sweden, etc., I can only assume from that Sweden's got a lot better broadband coverage than we've got.
They do.
Yeah,
potentially.
Because, something like, if you take it out with banking, DWP, I mean, just about every form that has to be filled nowadays of DWP is online. Yeah. That excludes a hell of a percentage of people in Scotland, because they're living in an area where the coverage simply isn't good enough. Yeah.
And financial inclusion is not just age, it's also geographic. I mean, there's so many islands of Scotland that don't have any access to a bank.
Well, yes, but the trick there is to live in a really remote island in Scotland, because they've got brilliant broadband coverage because they've actually supplied their own. The vast majority of cases. I mean, Peter, is this the kind of stuff that banks are worried about or arguing about at the moment?
I think the whole, Andy put it well, fraud's a big play. I agree with that. Financial inclusion is something right at the heart of what we think about. And if you think of just how we've treated customers over through the COVID period, as we treat them through collections and recoveries, through mortgage payment holidays, and even from businesses and supporting those. So there definitely are steps that we take to try and change and support all of the customers that we've got. And I think that's the interesting one as I listen through, you know, the fintechs and how they operate and what the banks are. The banks are thinking about, you know, as I say, half the UK adult population banks with Lloyds, right? So the whole financial inclusion, I've got to look after everybody within the organisation and think through all of the different channels and all the different products that they look at. An interesting one as I've moved into corporate banking from retail, and as you think about it, is you can go and set up as a corporate bank and as a business, a small business, you can go and set up your savings, your current account with a Starling, a Tide, etc. But actually then when you want to go and do something a little bit more complex, they don't do that. And that's typically then why they come back out to the banks to start to have that broader conversation of I'd like some asset finance, I'd like some invoice financing, you know, what do you do with currency, etc. The narrow sort of slices that we take off. And that's why I think the partnering is so important, because we can partner by pulling all of those pieces together to offer the breadth of services that the customers are looking for.
Can I pick you up on something? You said in your presentation that, you know, within Lloyds, everyone is a technologist.
Yeah.
They can't be. They simply can't be. And how does that gel with something that Devie said when she said, you know, in an ideal system, you shouldn't realise, if you're working through a process, that there's banking involved in it at all? Can I ask you to lean forward a wee bit again?
Yeah, sure, yeah. Interesting question as to why not everybody can be a technologist, but then that's your definition of what's a technologist. So I think of having an awareness of what technology is. So I'm not saying everybody codes. Right? Not all 60,000 colleagues within the bank code. But all of us need to have a better awareness of what technology can do and how it can support and put ourselves in the customer's shoes. So we're definitely trying to do more of bringing the business closer to the technology and vice versa, embedding the engineering into that. So there's definitely a lot more to do to do that embedding. And just as we grow, and if you listen and just sort of think to the pace that everything's moving at, if you're not sort of keeping current with technology, then you're going to get left behind, basically. So that's what we're trying to encourage. And it's that learning attitude, to be honest, Mark, that just gets into the psyche, that you don't just come in. We've had people really who 50 years ago would have come in, sat at the same seat, done the same job for 50 years. Well, that's not where we're going anymore, because the pace of what we're doing doesn't allow that to happen. So we've got to start to broaden and the diversity of what everybody is doing in those.
Again, I'm going to put this to you, Fiona, because I hear what you're saying, but I'm still uncomfortable with it. Not everyone who drives a car is a mechanic. You know, it's the assumption. There is an assumption there that somehow we're all going to be engaged with it, and I think an awful lot of people aren't. They don't want to be engaged with it. They just want the bloody thing to work. And what's your position on that?
Well, I think, as with all innovation, there's always going to be upsides and downsides and resistance at first. I think we get a lot of questions. You know, is embedded finance just a buzzword? What does that actually mean? Is it just on the predictions list? And I don't think it is. Will we still be talking about embedded finance in 10 years? Perhaps not. And I think the example to that is something like the phrase online banking. I think generationally there'll be a chunk of people who won't say online banking. What's online banking? To say online banking, you have to make a distinction between perhaps traditional banking. So, and the same too with challenger banks, which I think has fallen out of fashion. So I think with all these things, there's pros and cons, and there's going to be pushback, and perhaps rightly so. The job of the regulator is to make sure that there's good pushback and good challenge to ultimately protect consumers. But I don't think we can. I think the train's left the station in terms of technology and innovation in financial services.
Well, I'm glad it's up to you lot and not me. Anyway, can I ask you to thank our 4 speakers one more time, please? Thank you.